Is Supermicro Computer a relatively cheap stock? Well, in the eyes of Jim Cramer, it certainly is, but does that mean that you should be selling your position right now? Or is he actually right, and this could be a stock in which you should long right now and see the returns in the next coming years? Well, currently on a day chart, it isn't a long position, but it is seeing a significant sell-off since its peak. And in this video, we're going to be finding out whether or not this stock is definitely one in which you should obtain for your portfolio, and if you do hold it, if you should continue to hold. We're going to be looking at the news surrounding this stock. We're going to be analysing its quarterly earning reports. We're going to be looking at analyst expectations for it, and we're also going to be looking at my expectations for it, where I value this stock intrinsically. Are we expecting to see growth go forth into the future? So just a very brief business overview for the people who aren't too familiar with Supermicro. Who are they? Well, Supermicro is a leading provider of high-performance computing, storage, and networking solutions specializing in AI and cloud infrastructure. Founded in 1993 and headquartered in San Jose in California, this company competes with Dell, HPE, Lenovo in all AI server markets. And so why are we looking at this? Why is there a lot of demand for this currently? Well, AI-powered data centers are definitely going up in demand. And Supermicro Computer is essentially the hardware dealer for AI data centers, and its market cap is just going up and up and up. But it doesn't seem to be as if its stock price is following suit. Supermicro has collaborations with leading industry partners such as NVIDIA, AMD. Supermicro will benefit from advancements within AI hardware. Supermicro invests in manufacturing facilities within Malaysia and Silicon Valley. They aim to double production capacity over the next coming years, supporting projected revenues of up to $40 billion in fiscal year of 26. With the AI server market projected to reach $837 billion by 2030, with a compound annual growth rate of 34.3%. This is a massively rapid growing industry, and Supermicro, according to Jim Cramer at least, is looking very cheap at these levels, especially when compared to its peers. So it's fair to say this could be a perfect opportunity to buy into this stock at these levels, but we'll get onto my valuation later on. Supermicro is expanding into AI edge computing, targeting applications in autonomous vehicles and smart factories. So it's fair to say they are also somewhat diversifying within their custom base as well, which is really good to see. Furthermore, Supermicro has been added to the S&P 500 index in March 2025, potentially increasing institutional investment. However, it is fair to say that Supermicro doesn't come without its risks. For example, in the past, they have had delays with their financial filings and weakness within the internal controls when they did actually release these financial filings. For example, I think it was around a year or two ago, they were actually manipulated to make it look better than they actually were. And then this came out, and obviously the market's absolutely tanked. The market for Supermicro tanked. So there is a lot of antitrust situated within the actual stock. However, it's fair to say that since this has been reprehended, is that the right word? Probably not, but it's been fixed. And essentially they have fired the people responsible for this, and they said it was just a massive mistake and it won't happen again. They have margin pressures, increased competition and R&D expenditures may impact profit margins, and regulatory scrutiny is definitely something that they face with ongoing investigations and the need for improved governance structures to prevent structures present potential risks. So there is a lot of underlying risk with this stock, but I think when you compare that to the upside, I do think the upside does definitely outweigh the potential risks. But I don't want to be untrustworthy, so I am going to obviously tell you the positives and negatives for these stocks. So there are the potential risks. Now, I don't know why this slide is blue. I don't really know what happened here, but now let's go over the financial performance and intrinsic valuations for Supermicro Computer. So let's start this off by looking at their financial situation, and then we'll move on to their intrinsic valuation. So starting off with the retention rate here, this is at a mean of 6.2, which could definitely be better. But as I mentioned before, R&D expenditures are definitely hitting Supermicro quite harshly. But I do think maybe potentially going forth into the future, this will definitely start to improve. So 6.2. not ideal, especially when it's a company that's been around for quite a while. Looking at their liquidity ratio, I can't lie, this also looks quite bad for this company, but again, I'm not going to tell you, I'm not just going to say the positives, I want to say the negatives as well. So the liquidity ratio is 0.92. It's not that bad, to be fair. You want to see this at 1. So for it to be 0.08 off, I don't think it's that bad. But again, it would be something in which we would like to see improve. But to counter this, we are actually seeing a relatively decent free cash flow. It's not the greatest, but the mean is actually positive, which is good. So it does have that currently going for it. So on a 365-day exponential moving average here, we can see that we are now below the exponential moving average, which could indicate that we could expect to see us fall back down towards this, or we could actually expect to see us... it's really hard to basically place where this will push it. It can either push the stock further up as it's supported, or it could mean that we're going to head straight back down for it. But what you can look to actually help answer this is the volume. And here we can see that the volume was relatively supported at this level here when it hit around $50. So that is really good to see, as it means that it shouldn't really fall back down, but there is of course always the potential to. So on a normalized distribution here, the probability of a positive day is outweighed by the probability of a negative day, with the positive being 43% and the negative being 46%. That could indicate it's not a very good stock to be buying, but intrinsically, as I'll get onto in a minute, it does look to be a good stock to be buying. So over the next year, we can expect the growth rate of this company to be at nearly 40%, with a mean surprise rate coming in at -5. That's obviously going to push it back down. I'm probably not selling this to you guys at this point, but again, I'm being very brutally honest. I don't want to lie and sell you a stock in which I don't believe in. But here we can look at the intrinsic valuation for Supermicro, and this is exactly where I think it's fair to say the stock looks undervalued, and with my other intrinsic value formulas. So this is essentially Graham's formula. It accounts for growth rates, surprise rates, well, in my case, surprise rates, AAA bond yields, earnings per share. It doesn't account for too much, but my later formula does account for way more. But on the bullish indicator here, I get an intrinsic valuation of nearly $140, with the current price being at 40. So there's a $100 upside according to Graham's formula. And if we go on the bearish formula here, we're still way undervalued, with this pricing us in at 73, nearly $74. Good old Peter Lynch gives us a result of 3.4, indicating that this stock is very undervalued. And now my formula, which accounts for way more, such as discount free cash flows, shares outstanding, WACC rates, current price, obviously, dividend yields, which we don't have for this company, probability theories, retention rates, it accounts for it all, and this gives me a result of $112 for this year's growth. So I think it's fair to say, when you combine these all together, this stock does look to be undervalued, and my formula, which I made up myself, by the way, is definitely saying this looks to be undervalued. However, to counter this, again, I don't want to just be the man that says buy, buy, buy. There is a lot of risk here with their free cash flow. On a discounted free cash flow model here, they are hardly proving that they are worth anything for this year. They're proving that this year they're worth not even $1. So, but that's their discounted free cash flow. Again, their free cash flow isn't consistently great, so it's fair to say that that's fair enough. So looking at my previous price targets for Supermicro, it has been relatively volatile. However, I have now, with this analysis, just downgraded them, and downgraded them quite harshly. But to be fair, this still looks massively undervalued. So it's gone from 169 to 189 to 138 over the last, well, 6 months in a sense. And I've only just made my formula in the last couple of weeks, so I can't analyze that to previous data. And my discounted free cash flow previously was really high, but I've stated in previous videos on Supermicro, I haven't got a clue what I did for that, to be honest. I don't know how I came up with that number, so we'll just assume that discounted free cash flow is irrelevant in this situation. But here we can see that I have definitely downgraded Supermicro for this quarter. So maybe it's something to show that the projection for this, the trajectory, is probably quite negative, but I'm still quite bullish on Supermicro because I think it's still really cheap at these levels. So I do think it's fair to say I am ranking Supermicro in at a buy. There is obviously the risk surrounding Supermicro, but I still think this is a great company, and going forward with the almost compounding of the interest within AI data centers, I think it's fair to say that it's going to be a massive company going forth into the future. And they're not particularly affected by tariffs either. They don't really do too much business with China and the EU. So I think it's fair to say within the AI world, they might be one of the safest companies when it comes to tariffs. However, there is always going to be a knock-on effect, and now it is situated within the ETF of the S&P 500. It's going to obviously see short selling pressure anyway. And speaking of short pressure, let's see what the short interest is, and it is actually 25.21%, which is incredibly high. So that indicates that there's a lot of short pressure. There's a lot of people currently shorting, which if you're new to stocks means betting against this company currently. So there might actually be quite a lot of risk intrinsically linked to this stock, and I think that's what a lot of investors are thinking right now. But let's move on to analyst price targets and market sentiment. So there is a high of $93 on this stock, which is lower than mine actually for this year's growth, with an average coming in at 45, which is barely above where we are currently, and a low of 30. I think it's fair to say, according to the analysts, this stock is relatively just about undervalued, but in my opinion, I do still think it is quite undervalued, more so than they do anyway. So these potential price targets signal a potential upside of 125%. or a downside risk of approximately 27% from the current price, which I've just realized you can't see because my fat head was in the way. But so we're seeing analyst ratings currently 6 at a buy, 10 at a hold, and 2 at a sell. The consensus rating is a hold for Supermicro currently. And who doesn't love a good old SWOT analysis? So if you don't know what this is, it's strengths, weaknesses, opportunities, and threats. But I imagine the majority of you do know this. So for strengths, they have strong partnerships with AI leading companies such as NVIDIA, AMD, but you've heard that already. Weaknesses, financial reporting and internal control issues. And of course, their free cash flow is not particularly great. Same with their retention rate, it's not very good. And their liquidity ratio is pretty good, but it could definitely be better. The opportunities, expansion into edge computing markets, which is really good as it allows for them to diversify to an extent. Growing demand for AI optimized infrastructure, which when you do think of who am I going to buy a data center from, an AI data center, you think, well, Supermicro, of course, because they do have them leading partnerships such as NVIDIA. And the threats are intense competition in server markets and regulatory compliance risks. So what are the considerations for Supermicro? Well, in the bull case, they are positioned to capitalize on AI infrastructure growth. Strategic partnerships and technological innovations are definitely going to be on the side of Supermicro going forward for the next 10 years. There is, of course, a bear case for this. For example, the operational and financial uncertainties behind Supermicro is definitely the reason why it is so low compared to its peers. Potential for continued stock volatility is definitely something in which I think is quite obvious, as we discussed further up here somewhere. This is really laggy because this page is so full now. The probability of a positive day is only 43, whilst the negative outweighs it at 46. So it's fair to say there is definitely a lot of volatility within this stock. And on volatility, the beta is set at 1.4, which is actually not as high as I expected it to be. But there is obviously analyst sentiment mixed, with some upgrades citing growth potential, whilst others express caution due to financial concerns. So you do need to form your own opinion with this stock, but I do think it looks undervalued, and so do a lot of other investors, but you need to make your own opinion up. So in summary, Supermicro presents a compelling growth story within the AI infrastructure space, but faces notable risks that investors should consider when compared to its peers. This stock looks massively undervalued, like Jim Cramer said, of course, and as I have shown in my intrinsic valuation formulas, this stock looks to be set up for a lot of intrinsic growth for this year. So I would like to know your thoughts on this stock, of course. Let me know in the comments what exactly you're thinking. But let's just quickly do a day chart analysis. So we are obviously in a long position on the MACD, but it does definitely look to be closing up into a short within maybe the next couple of weeks. Right now, as of recording this, the markets are extremely volatile. So it's fair to say that we're kind of expecting to see everything falling at the moment. As of recording this, it's Friday. I don't know when this video will be out, but it's fair to say it's definitely falling down today. On a 15-minute chart, it is below all of the exponential moving averages and in a short position on the MACD. So if we go back to a day chart here, we can see that it didn't actually quite reach its level of resistance here, and it does look to be heading back down to its level of support. And I'll be honest, I do actually think this is just going to continue to drop, as I feel like Supermicro is possibly one of the first stocks people sell just because it is so volatile, and especially in a volatile time, you're going to sell one of your most volatile stocks first. So it's fair to say I think this might drop down even lower, but I do think if this drops down to anywhere around the $35 mark, this stock could be a perfect buy. And even at these levels, I still think it's a really good buy. But again, there's a lot of uncertainty around this stock. This stock could, this could 10x this stock, but it could also fall down massively. So there's a lot of volatility, as I've said many times. So I hope you have enjoyed this video. I am going to end this here. I make these videos for free for you guys. I don't earn anything off of YouTube as of yet. So a share, a like, a subscribe would be greatly appreciated. And I'll see you for the next one.